So, hello guys. Today we'll be analyzing a business. The name is Addictive Learning Technology Ltd, and the ticker symbol is Lawsikho. So, it's an SME company, and it recently got listed around January of 2024. So, it has been over a year of listing, and well, the stock price has not moved a lot. It is actually below the listing price as of now. So we'll be discussing first of all um, why I think this company is interesting to track. What do they do? And then their growth guidance and valuations, of course. So they started from just this brand Lawsikho, and they actually did extremely well in law. They currently have a decent social media presence. You can check out Lawsikho on various platforms. And so they actually had this advantage of starting a blog which is by the name of IP Leaders. I'm sure every law student must know. I'm also a law student, so I know of this blog. It's a very famous blog with a lot of people in law that organically come to this site to just research, and they get a lot of traffic and they can sell a lot of their courses. So they're a course company, and they just so for any other company to compete with them in law, they would have to spend a lot on advertising, and they might not even get the most relevant audience. But even they realized that the market in law is not very large and they had larger ambitions. So they, I think it was 2023 that they started this another brand, Skill Arbitrage. Now they're not limited to law. They'll do any and everything that is viable basically. So they'll make courses. So at first I was very skeptical about them doing this. Even they were not extremely confident, I guess. But it turned out very well, and now law is actually a minor portion of their revenue, and the major portion comes from this new segment. And the law segment is also growing very slowly, but yeah, it does not contribute as much. So when they were coming for the IPO, they were not making a lot of money, bottom line wise. So they had to, use some funds. They had to raise funds, but till the time they got listed, they were actually profitable, pretty profitable just from internal accruals. So at first, they didn't use the funds right away, but now they are, using some more funds for their growth. So I was tracking this company since the IPO, and the first I got interested in the company was around here. It was making new highs, and that is always something that attracts me. So I paid more attention to it, and as it turns out, they had given a guidance of doubling their revenues from 2024. So they did about 60 odd crores in 2024, and the guidance initially at the end of 2024 was essentially to double this. That was their target, at least in 2025. And they also indicated that they'll be getting a lot of operating leverage uh, because as they scale, they didn't anticipate cost to scale as revenue. Then on November 14th of 2024, they released their first half results, the first 6 months. They're an SME, so they don't, give quarterly results. They only give it every 6 months. And in that, they did around 41 crores, which is, not half of 120. But I expected them to do, like 45 to 50 in that range, because anyways the growth in their revenues month on month, so if these are like 12 months of FY25, so when they started the year they were only doing 5 crores a month of revenue, and they said that we're aiming to cross 10 crores by the half year, and eventually much more. So the average should come to around 10 crores per month of revenue, which would make it 120 of 12 months. But what happened is they were supposed to hit 10 crores on the 6th month as per plan, but they hit it in, I think, November, as per the con call at least, November to December. So they're essentially a couple of months behind, which is fine, right? It's business; these things happen. But the market did not, of course, take it very well. More than just their results, it was also that it was a very weak market. Also, the guidance was very, very aggressive. So the market was trying to, anticipate a bit more than 40 crores, I think. I would assume 45 to 50 at least. No one was anticipating 60 crores. That will indicate that they'll exceed the guidance, because even after the sixth month, they'll have some increase in revenue month on month. So then in December they had a con call. They explained their growth plans, a lot of growth drivers, a lot of things they're trying, and this is a good thing as well as a bad thing, because I think they're focusing on too many things at once right now. This is from the con call. So someone essentially asked them, "Will you be able to do the 120 crores for the whole year?" And they said the minimum thing they'll do is you'll double our profit. So they did 6.5 crores of net profit last year. They're thinking 13, right? Which is also not a guarantee, of course, but that's what they expect to be able to do very reasonably. And they think they're on track for that. And I agree with them, they're on track for that. And revenue wise, they're saying that there's a good chance they'll get there. So it might be a bit short. So it all depends on the last 3 months, is what they said. Overall, I think it is not very likely that they'll do 120 crores, but I'm pretty confident that they should do 13 crores. If they don't, of course, we'll reevaluate. But I think this is on the cards. But about the 120 crores, I think 100 to 110 crores is more reasonable of an expectation to have, which is also not a guarantee. So let's do a basic valuation exercise. FY25, they should do around 13 crores of PAT. That is my expectation, and it is also the promoter's expectation. It's not a guarantee, of course. And they're currently trading at around 425 crores of market cap. So essentially, they're at somewhere around 33 times FY25 earnings. For a B2C company growing at 40%, which I think will not dilute a lot in the future. I think this is a good deal, but it is not financial advice as always. It is something that you do your due diligence on. But the very important thing with small companies like this is to, always keep managing your risk. You have to manage your expectations on the timelines and also the risk you're exposed to, because they don't have the best of balance sheets. They don't, by definition, they don't have the best market position because they're a very small company. So, full disclosure, I do not currently have a major position in the stock, because I used to actually. I purchased it when it was making new highs here. I thought everything was going well, but then they came with the results, and on this fall, I remember after the results, uh, I sold some here and some more around here. So 370 to 380 rupees a share is where I exited, simply due to the fact that I knew that because they sort of missed their guidance by a bit, the street would not be happy. And even if the stock does not go down, it is not likely to go up, because stocks that miss the guidance, they usually don't make new highs very easily unless there is some other catalyst in the industry. They will not make new highs. So I just had to protect my capital, and in hindsight, it turns out to be a good decision. But I think it also has a lot to do with just the general market conditions. Had the bull market continued like it had been, I don't suspect that it would have corrected so strongly in from December to Jan. There was nothing bad about them in January, because the con call was also in December. So why would it fall so much in January? But this is why you always have to manage risk, because it is not clear what they'll do in H2. They might do just 40 crores in H2, right? So if they do some disaster like 40 crores in H2, you'll basically not be making any money for sure. So you always have to manage risk, and just be very ruthless when it comes to managing risk. But I will be much more interested if it turns around from here and starts rising and shows a sustained rise, shows a breakout of some sort. Because then I'll know, let's say after H2 results, that could be a big catalyst. Let's say it reverses and it starts going up. I would be more interested at that point because I'll have more clarity, which I currently do not, about what they'll do in H2. I don't think it should be very, very bad, and the valuations are not sky high for a big correction, but you never know. So, overall, that was it. It is definitely a business that should be researched by more people who are into equity investing full time. So the next video will likely be on risk and how I have managed risk, how I'm still learning to manage risk much better, how you can also focus on risk management, because I think this is a area which is not focused on by a lot of people. Will learn about what risk is, how other investors have managed risk, and how you can also form your own strategy to better manage it. So that is it. Thank you.